Welcome to Buy, Hold, Sell. I'm Jeremy Hook from TMS Capital. With me on the panel today is Jun Bei Liu from Tribeca and Sam Granger from Totus Capital. And our topic today is the banks. They had a bad 2018 but bounced back strongly this year, and then we've seen rate cuts from the RBA, the APRA move and the surprise coalition win. So are the banks back in town? Jun Bei, are they now more investable than they were a year ago?
Look, certainly the tail risk has been removed, so it certainly looks better today than it was beforehand. So first of all, we've got election stability, and second of all, we've got APRA lower the limit to potentially increase the credit growth that is good for the banks. But the rate cuts, it's not great for the banks, but most of the large falls, they do have hedging in place to cushion that fall.
Okay. So Sam, banks now with the price movement up, are they still as investable?
Yeah, look, our concern 12 months ago was a spike in bad debts, and we really haven't seen that. And actually, the labour market's probably been stronger than we would have thought. I agree with Jun Bei. I think that the coalition victory is good for the banks. And so, yeah, moving forward, we think the banks are in a better spot now than they were 12 months ago.
And you see that going on. So it's not just something which will disappear. The economic climate slowing down clearly worries the RBA, otherwise they wouldn't have cut. That's not going to play into the banks in further strength, really, is it?
Maybe not, but we sort of think that the victory of the coalition actually brings forward the bottom of the housing market, which is material for the banks. We also think that the change in APRA's serviceability guidelines is a big deal for the banks. That might unwind some of the credit squeeze we've seen. So we think there's some positives, and this is some permanent positives to the banks rather than just a one-off sugar hit.
Okay, thanks Sam.
Just like to add on to that on the back of it as well, just something technical for the banks. Now the banks is on big yield, and with earnings that look somewhat more stable, yes, there will be further dividend yield cut, but they're still enormous. You look at the dividend yield. And now with Aussie market sitting quite defensively again amongst that Asia Pac space, you will see increasing amount of capital flow into Australia. And where do they go? Top 20. And bank stands very well in that space because of the yield, because our market composition. So
you're saying over short and long term, they still look very attractive?
I think this, the technical side is definitely for the short term. In the next 3 to 6 months, they look very attractive for foreign investors coming in, supporting the valuation. And in this lower for longer environment, where do you get the yield?
That's a very good question. People will be asking that. A question I've got to ask you though, this rate cut from the RBA, it's a question I think viewers would want to know. Is it actually good news, or is there a negative tinge in that as well?
Look, there's a reason for rate cut. The reason is our economy was not strong. It was heading to a very shaky, close to recession sort of level, particularly if the government did change into labour and, given some of the policy touching on the negative gearing changes and the like. So it was looking quite shaky, and consumers being very, very tight, high debt, low discretionary spend, no wage growth. So where's the spend come from? Especially if this trade conflict picks up, iron ore price could fall, and that's the income for our country. So on that basis, our economy doesn't look strong. So with the rate cut, it certainly is their signal of saying we're here to support you. Same as what government is saying, here's the splash, the tax benefit. So it's very important.
Okay, that's good. Sam, the idea of a cut to the RBA does reduce some of the funding costs for the banks, but does it also reduce their margins?
It's a good question, and that obviously depends on how much of the cut they choose to pass on. I agree. I think the big issue is it's very supportive for the yield trade. Their valuations get quite attractive as those cash rates come down. There's no doubt about that. It remains to be seen whether the cuts will stimulate credit growth. We think there's a chance they could. So the banks look okay to us.
So across the bank sector, they're not all the same. We tend to look at them as one big unit. So if you see them okay at the moment, are there better pockets of value?
Look, I wouldn't claim to be the expert on which bank is superior to the other. What I would say is I think NAB, through the boom, probably maintained the best credit standards, best lending standards. So I'd probably pick NAB. But overall, the Ps look okay, the price to books look okay. I think the bank's a decent value.
Do you have a view on the majors versus the regionals?
Not a strong view. I think I'd probably stay with the quality, stay with the majors.
Okay, great. Jun Bei, I was going to, before you get in, I was going to ask you, do you have a favourite in the bank sector? Is there one that stands out for you?
Absolutely. I think NAB is far better positioned. Yes, of course, it doesn't have the biggest home loan exposure, but home loan is where the problem was. Yes. So it's exposed to the business banking, commercial side, and we do believe that's well positioned and it's cheap. Yeah. It's a good 3 PE points cheaper than the Commonwealth Bank. Dividend yield is 6.5%, I think. Massive, one of the highest. Yeah. It's massive. And they already revised their dividends. So, to me, it's a much better bank to hold. But look, all top four, they probably trade very similarly, but NAB is better positioned.
Does that mean CBA is a bit expensive?
Yeah, CBA has always been expensive because the high ROE they maintained. But in the latest result, we've seen that's coming out. There was weakness across quite a lot of divisions, and we do fear that premium could come out in the next 12, 24 months.
Excellent. Well, our panel has joined with the enthusiasm of the bank sector of late and thinks it is an opportunity there, and particularly on NAB.